Again, a very warm welcome. And I would like to hand over to Mark.
Thank you very much. I'm going to see if I can share my screen with you. Can you see my screen?
Yes, sir.
Wonderful. Well, thank you, Michael. Once again, pleasure to be here. I will keep this short and sweet. This is a topic very close to my heart. Before I started working in marketing and branding and communications, which is now over 20 years ago, I used to work at KPMG as a chartered auditor. So yeah, that was before I lost my way into marketing and branding and communication. And the topic is really so interesting because with the licensing of corporate brand, we're making a bridge into other functions within the organization, especially the tax, finance and the legal function. And that's ultimately fascinating for me because my theme, and that's also why I'm consulting with a lot of larger organizations, is around brand in the boardroom, and licensing is a very topic, very specific, that helps with that. So I'll talk for like 10-12 minutes, and then I'm going to hand over to Lars for him to talk you through the specific and practical case that they have at the moment. So let me talk first about the business value of branding. Obviously, everybody knows that brand is the most valuable intangible asset of an organization. According to Brand Finance, it accounts for almost 20% of the market capitalization of the biggest companies of the world. And you can see on the quotes here that there's quite a number of business leaders who acknowledge the value and interest of brand. Now, why is this so interesting to me? Because brand is about how you organize and orchestrate the relationship between an organization and the external environment. And that is a multifaceted thing. It's also quite complex, as you all know. Now, if you look more specifically about the value of brand for customers, then the value of brand is there in where you differentiate from competitors, and ultimately that's expressed in a higher price premium that you can command. So the concept of giving your brand in use to someone else is very interesting because it's putting a direct relationship between the value of the brand and the revenue. So if someone else is willing to pay a percentage of their revenue to you to use your brand, or the other way around, then it is really interesting to see how that works, because it's immediately the language of the people in the boardroom. It's the business language. It's about revenue, about income streams that you can generate. So to me, that's why brand licensing is such an interesting thing. I will walk you through dimensions in a minute: the legal dimension, the financial dimension, and the tax dimension. I think most of you are familiar with the concept of licensing externally, but there's also a very big lever that is very interesting for us in the communications and brand community when it comes to the internal mechanism of licensing the brand. And I will explain to you why that is so important. So let me first talk a bit about what we mean when we talk about brand. I mean, if you look at the legal profession, when you talk with legal people, the first question they will ask you, well, you talk about brand, but what do you mean? Because we have all these beautiful words of brand and communication and reputation and brand equity. So what is it that you mean? And from a legal perspective, a legal person will always look at which is the specific bundle of intellectual property rights that together make up the brand, which could be very narrow, like you see on this slide. It could equally be very wide, because if you look at the brand experience, and of course we've seen a whole paradigm shift in how brands organize themselves and how a brand experience is governed, then you can see that the first question of relevance is, what is the specific bundle of intellectual property rights that we're talking about? Is it very narrow, like you see here, or is it very wide, or something in between? So from a legal perspective, very important to understand what we mean by brand. Now, if you would talk to financial people, they look at the world through the profit and loss account and the balance sheet. And I will get back on the balance sheet in 5 or 6 minutes. If you look at the profit and loss account, if you look at the blue circle, that would be like the conglomerate that Siemens is in Germany, has a market capitalization. You could say that is the branded business. So that's the value on the stock market. Within that, you have divisions, like you have Siemens Infrastructure or Siemens Energy, and those would have a brand contribution as part of the branded business. That's basically the value of the business units within that. And then within each of the business units, you have the trademark value, that brand value would be. So if you look at the popular rankings that people like Brand Finance, Interbrand, Millward Brown put out there, they will always publish the middle circle, that's the brand value. So that's the narrow definition of the trademark value of Siemens, the brand value, very specifically in a small and narrow definition, how much value, financial value does that have for the organization? So for financial people, they will not ask you about the bundle of intellectual property rights, but they will ask you, am I looking at the P&L of the group and the value? Am I looking at the P&L of a division? Or am I looking at one of the assets, in this case, the most valuable intangible asset, which is the brand? So again, legal and financial people look at brand in a totally different way than we are used to speak about it. And they think that the way we as marketeers, communicators, branding people talk about fluff quite quickly. So in the work that we do with our clients is really mostly starting in organizing a workshop for a day to get your head around this topic, do a bit of education before we go out and liaise with the people from the finance, the legal and also the tax department. So the heart of my little talk with you for today is this slide. I am not sure whether people are familiar with the concept of transfer pricing, but for tax people, the whole education in university is about understanding the transfer pricing mechanisms. What does it mean? Every multinational has to agree on a set of agreements on how you value the use of products and services within the conglomerate between countries. Because as you know, every country has their own tax authority. So it's very important for every tax authority, every country basically, to have all the profits and all the costs in the right place. Because if you have a lot of cost in one place and the revenue somewhere else, then it means that the tax authority that sees all the cost gets less tax paid from the company, and the country where you receive all the revenues is paying more tax. Obviously, the tax rate varies across countries, so you can see that you can play. So BEPS is the framework that has been put in place 6-7 years ago by the OECD. It stands for Base Erosion Profit Shifting. So Base Erosion Profit Shifting. Basically, it's the framework to avoid companies to shift with tax left, right, and center. And you've seen a lot of examples where there's also a lot of shaming nowadays, and there's a lot of sensitivities around this. The interesting thing is that this you have to do with products and services, but you also have to do this with brand. So if you own the corporate brand in the holding company and say your holding company is in the Netherlands, then all the operating companies in an organization have to pay a charge, a percentage of revenue every year internally to the holder of the corporate brand. So if the intellectual property of the corporate brand sits in the Netherlands, then the Netherlands will send an invoice internally every year to all the operating companies. Now, this mechanism is very known in the fiscal departments, in the tax departments, but whenever I ask our clients, are you aware of this? Do you know how it works? I mostly get a lot of question marks and raised eyebrows. And it's ultimately interesting for you, because if you own the corporate brand, then if you talk to your tax people, they can explain to you how much value they have put on the brand internally to do this charge, this internal royalty charge for the use of the brand. So it would mean, if you engage in a decent conversation with the people from tax, that they can tell you that for internal purposes, they have valued the corporate brand as an asset. And instead of talking about the cost of managing the brand and orchestrating the brand experience, you start talking about what the value is. And this is the internal value that is accepted also by your CFO. So I was talking about the value that Brand Finance and Interbrand and Millward Brown put out there. That's, say, the optimistic external value. The internal value, as determined by the tax department, will also be much more conservative. But if that would be your starting point, you can have totally different conversations in the board about, hey, I am responsible for managing the corporate brand. My tax colleague is telling me this is the value and this is the percentage of spend that we have every year. So it's a very relevant conversation to understand the mechanism. All the technicalities you can forget, and you will see when Lars does his talk after me, there's quite a lot of knowledge required, but that you can have with support from other departments. For you as the owner of the brand, it's important to understand that these mechanisms exist in any international company. It's only a question about properly liaising with the people from legal, finance and tax to find out and then to use it to your advantage. So I think it's a really important mechanism. It's transfer pricing on the brand that will take place in any multinational. So that will be my recommendation for you to do some fact finding internally if you haven't done so already. My last point for today is about the phenomenon, also for financial people, but also for marketing and communicators and brand people. There's a lot of talk about brands in the balance sheet. I wrote an article about this 2 years ago, I think, and this was when Microsoft acquired LinkedIn. And as you all know, the LinkedIn brand still exists. So Microsoft has acquired LinkedIn, and on the balance sheet of Microsoft, if you check out the public accounts from Microsoft, you will see that the brand LinkedIn is put on the balance sheet of Microsoft, which is quite interesting because the brand value of Microsoft itself is not posted on the balance sheet of Microsoft. So if you look at the balance sheet of Microsoft, you see the value of LinkedIn because they acquired that externally, but the financial accounting principles prevent an organization to put its in-house developed brand, in this case Microsoft, on the balance sheet. So my recommendation is to always be careful to start talking about brands in the balance sheet, because all the financial people will understand that this is only allowed to talk and to post brand in the balance sheet in very specific situations. More specifically, and this is since 2005, if you acquire a brand and you decide to keep it, like Microsoft bought LinkedIn and decided to keep it, then you must put it on the balance sheet and assess it every year. If you developed it internally, it's prohibited to do that. So that's a known disparity under financial people. And if people in our community from a communications or brand perspective start talking about brands in the balance sheet without knowing these things, you can see that people go like, well, actually they don't know and they don't understand this part of the puzzle. So I'm also having an eye on the time. What I wanted to share with you today is exactly these things: the legal perspective, the financial perspective, and the tax perspective, transfer pricing on brand and licensing, not so specifically from an external perspective, but really for you as an owner of the brand to get the conversation, to stipulate the conversation around the value of to what are the efforts to do to really maintain this brand. So with that, I'm going to leave you. I'm always happy to talk about this subject. I'm really passionate about it. So feel free to reach out to me afterwards if you're interested. And otherwise, I'm now going to hand over to my friend Lars. And I wish you a lot of pleasure and looking forward to the Q&A in 30, 40 minutes from now. Thank you very much.
Thank you very much, Mark. As always, a nice introduction for a very important topic from my perspective. I'm just about to share my screen with all of you. Hope you see my screen in full scale.
Yes.
Yeah? Okay, great stuff. I'm not sure. I only remember Andrew, who participated one of our previous sessions within EACD, where we talked about this transfer pricing and brand licensing topic. Within this call earlier this year, I shared with you the current status of our project, and I promised to keep you updated with the latest development, which I will do with pleasure today. Beforehand, just a very quick introduction, as not all of you might know Der Touristik as a company. This is, on the one hand side, the presentation of the company as of today, the various countries, and on the other side, this is our so-called brand zoo, which is reflecting our current brand portfolio, registered in the various markets and operating partly also transnational. So Der Touristik is actually the second biggest European tour operator and travel company. Let's see how the crisis will go on and how the effect of the business is. Maybe we will appear as number one when Corona is over, as TUI and all other tour operating companies are struggling a lot. Of course, they are with selling more during the crisis, covering our losses, which is a advantage which we have in comparison to our competitors. If you look at it, you see it's very difficult to get an idea about the appearance and the whole architecture of the group. And in connection with this situation, we found out that our new brand system, which was introduced 2013, is becoming more and more important for the group to visualize the strengths of this anorganically grown group to partners and customers. So on the left-hand side, you see that in connection with our group endorsement, we try to become visible as a group in the various parts of the group. On the other side, in the middle, we are welcoming our guests coming from the different source markets with almost 52 so-called DMCs in the various areas of the world. Actually, this DMCs are operating under 6 different brands, and we will change it to one brand, which is Der Touristik. And you see it on the right-hand side also, the legal entities, for instance, Der Touristik UK, previously known as Cooni, or Der Touristik Swiss, same as Der Touristik UK, previously known as Cooni, will or have rebranded to Der Touristik, which is part of the strategy, which is a task for the brand, which is great. So therefore, we thought it could make sense to structure the brand system in a way that everyone is able to identify the different parts of the group being part of this group. So therefore, you see the upper level of the brand appearance, which is mainly Der Touristik with the ingredient of the various regions. And in the part below, you see hotel, tour operator, or sales brands operating in the various countries. So this is a theory. For me, as brand manager, I thought it's a quite nice strategy. It's a quite good idea. But how to deliver in context of this strategy change, of this brand change, a approach which is tax compliant. As Mark said, due to the fact that we are about to use a brand like der Touristik in a much broader scale and in various countries, immediately the question came up how to liaise with this transfer pricing tax problems, which is, and I'm not having this legacy as Mark have, I'm not worked for KPMG or another completely. However, I found out that also this kind of tax system, licensing system could be this tax system enabled me to become much more visible with brand topics in the boardroom because the financial risk coming along with this brand licensing topic is huge. So just to share one care of some intellectual property coming along with this carve out, and out of a sudden we faced a 150 million demand from the tax authorities in Germany, which you can imagine automatically lifted my visibility in the boardroom, because we talked about almost 50 million tax, which we could negotiate it down to 15 million we had to pay. So therefore, we started a project, and this is just to give you an idea about the complexity, but also about the current status of the project. So the challenge is that we have to somehow, based on the various tax laws in the various countries, we have to reflect the use of the various brands being registered mainly in Germany and being used abroad, which is a difficult thing because, as Mark mentioned, the different tax authorities also, although we are living in the European Union, each country is having different tax regulations which we have to take care for. So the objective of our project is to develop a license model that is in line with the arm's length principle to minimize the risk of tax adjustments. Therefore, we are currently working on the derivation of individual license rates for each group entity to conclude further down the road a license agreement accordingly. How do we deal with this situation? And this is not the only approach, but the approach at least we used to tackle this challenge. We tried to find out the relevant revenue basis. I will elaborate on this even further later on, but this is one difficult thing, as hardly completely streams they use under their own name, they acting as resellers, so various and out of our brand system. Secondly, we have the aim to define a basic license rate that is applied for the use of the red brand system. And based on this license rate, due to the different usage of the brand, we try to reduce this amount because our aim should be to reduce the license fee for the various countries as good as possible. We are using the so-called Dempi-Racy analysis to value, to admire the different situations. Just trying to go further, I hope. Not sure why. I tried to go further, but okay. Sorry for that. Where we are actually in the project, and I don't want to go into details, just to show you the various steps we went through. Of course, we did a first step analysis of various documents and try to somehow define a situation. Based on that, we conduct a Dempi-Racy analysis to identify the individual value contribution of the DARE group entities. I will elaborate further later on. Then, and this is the process we are in currently, although due to some circumstances we lost a bit track based on our original time schedule, but we are currently working on the basic license rate for the right use. And then, and this is a quite important exercise, we are detailing the company profiles regarding the functions and the revenue streams behind those companies. This month, and I'm looking forward to accomplish this task in October, maybe early November. We are then developing a license model which will enable us to conduct and draft the contracts with the legal entities and to roll out the system. Not sure why, but obviously the computer needs some time to go further. Sorry for that delay. Okay. These are the work steps we went through. I explained in the last session beginning this year that for us it was very, very important to identify the relevant assessment basis. The problem of our company was that, believe it or not, it was not really clear which companies doing which work under which brand in our group. This is one finding which I will show in my summary at the end of this presentation. But doing this kind of mapping enabled us to get a huge transparency about the situation in the company on a very, very detailed basis, which we not had before. The second step is determination of the basic license rate. The problem is that we started with a relief from royalty approach, which is not really reflecting the specific situation in our company. So therefore, we said we have to drill a little bit deeper into this topic to find the right license rate, the right license fee for our company, for our needs, which is much lower than the benchmark shown in the various databases. The third step, conducting a combined Dempi and Racy analysis, was helping us to get a better idea about the involvement and the concrete steps the different countries are involved when it comes to the brand usage and the operational work with because this based on the individual situation of the various countries, and this is somehow lowering money was in the interest of the countries. Just 1 second. I will not go through this this text. More than happy to share this presentation with you, but I would like to steer your attention on one a basic and main question from my perspective, and this is the question at the very top of this graph. We ask ourselves the question: how much of the actual revenue is generated by each group entity by promoting sales under the red brand system? So the brand system which is used transnational. Because of course they are using local brands, but most of these local brands are registered in the various countries, so there is no need to think about a brand license fee. But for the brand, for the red brand system, which I showed you in the beginning, it's very important also to witness this to the different tax authorities. What is the revenue which you could allocate as being influenced by the Touristik brands, for instance, which is a difficult exercise because this is somehow an important factor for the brand license fee at the very end. Therefore, we found out that in our group there are different scenarios. There is one scenario where our companies using the red brand system as working as an agent. Yeah, they are just using the brand for pure reselling, for instance. Then there is a approach number 2, primary use of the brand of the red brand system, which is true for companies using the brand to generate revenue in own name and on own account. So having a value chain locally, which is a case for a license fee, which need to be integrated for those situations. And then the approach number 3, there are some countries which are using the brand system only as a corporate brand and using their own local product brands to generate value. But even the usage of a corporate brand, der Touristik, could be add value to the local countries, for instance, through using this brand in the HR sector, for instance. The question is how much of this value is generated or influenced by the red brand. Then the second step, we determined a basic license fee. And I mean, we all know the topic of benchmarks. There are various cases which you can find in various databases, how companies handle their brand licensing fee. And of course, there are different approaches. There is the approach of a company which is shifting all brands offshore to generate as much license fee as possible to somehow derive revenue before tax from the local entities, which is becoming more and more difficult. In our case, the approach is to lower down the license fee as much as possible, and therefore, as a first layer, we determined a license fee between 0.8 and 1.3% as being appropriate. This was part of the negotiation with the German tax authorities, which is the starting point we founded our current work on. This is, in a nutshell, the combined RACI and DEMPI analysis. Also, very shortly, but the basic question is how the various entities are involved in, on the one hand side, the various steps you have to take into account in order to operate and to maintain a brand, which is the development, the enhancement, steps are handled by the central organization. So the influence of the local entities is quite low, which is documented by the RACI analysis, because the RACI analysis is referring to DEMPI and asking the questions to the local entities in which a degree you are involved in these various steps. So are you responsible, accountable, consulted, or informed? And if you then look into the last step, we are conducting all this different analysis coming together. You see it in this part below. We have determined a basic license fee, 0.8 till 1.3% of the relevant turnover, and we are multiply this basic license fee with the results of the DEMPI and the RACI analysis, which is then in summary ending up in a very specific license fee from the amount perspective, which is then invoiced to the various countries. All this to find a fair and authentic and realistic reflection of the brand usage in the various countries, not to handle this topic of transfer pricing in a way which is more a one-size-fits-all model, which would be quite unfair for our countries, but also which would cost us much more money due to the fact that some countries are using the brand only for very basic processes, while other countries, like in Romania, for instance, using the brand as the core lever for revenue and turnover. This is the process we went through. Might be a bit complicated, but if you go through after this meeting, hopefully you will find some topics which could be of interest for your organization, and if not, maybe it's just an interesting exercise for you to drill a little bit deeper into this transfer pricing topic. I can witness that myself enjoyed a lot to drill deeper into it after a while, I have to admit. At the very beginning, I was a bit desperate, but meanwhile, due to the structure and the help of the specialists, I think we are on a good path. One last slide, which I would like to share with you to close my presentation, because beside this very complex work on the brand licensing topic, this exercise brought a lot of additional value to our company. At the very first stage, I already mentioned it, it gave us a lot more transparency about the usage of the brand and the value chain in our company. Sounds a bit silly, but you all know that companies which are grown and organically, they are very often not dealing with the legacy of the company. So the company's delivering a revenue, so therefore all business processes are untouched. But in doing this exercise, we found out some very interesting frictions, for instance, which we will tackle further down the road. One additional topic was that based on the brand mapping we conducted, we found out that we have to do some homework on the legal ownership of the various brands, due to the fact that the question who is owning the brand is quite important in order to set up a proper licensing model. Last but not least, and this is my last remark on this, there is an improved general awareness when it comes to transaction in the area of M&A. Because we found out that whenever we acquire a company, the brand topic very often is coming at the very end of the process. However, the issue with the tax complaint, which I reported, and the work on this licensing model brought us much more visibility in the boardroom, and there is no M&A project where right from the beginning the group brand management is not involved any longer. So with that, hopefully it was at least a bit inspiring for you to get an update on our project brand licensing we are currently working on at Der Touristik. I'm looking forward to your questions and to a vital discussion. Thank you very much for your attention, and I hope you stay healthy and happy.
I hope you can hear the clapping of hands, Lars.
Yeah, hopefully. Hopefully. I mean, I know that this is on the first view a very weird topic, but hopefully it came across that even such a topic could be fun.
No, 100%. I actually think it's a very sexy topic in the sense that branding is very often around design and creative and emotions and stuff, and to actually go a level deeper, as you said, on that, I think is very smart and was really interesting. Thank you very much for that presentation, Lars. So yeah, I would like to open up for questions first of all, question and discussion.
Maybe I can ask a question just to loosen things up a bit. Lars, you mentioned that this whole licensing program also was related to tax-related issues. Was that also the beginning of the program, or were you looking into the licensing already? So that's one question. And the second question is also, how has it helped you in getting more profile with the board? And has it also enabled you to get better conversations on the budget that you need to defend every year? How does that work for you?
So answering the first question, we worked on the brand licensing topic before. However, the problem was that we didn't have any adequate resources to do so. So it was more, yeah, we have to conduct a contract, determine the rights and responsibilities for using the brand, but the license fee topic and the tax issues which were connected were somehow underrepresented. In having this incident, which I talked about, facing this 150 million check, automatically helped me to get the resources I need to work on this topic much more professional than in the past. And for me, it's not a miracle. I wouldn't call it miracle, but due to the fact that the financial risk of the situation became very clear, especially the board members raised their attention on this topic, and they really acknowledged the importance of this topic, which is helping me also with other topics around the brand, because out of a sudden nobody is neglecting the value of brands any longer, because somebody from outside, in this case the tax authorities, they claimed some additional tax which we had to pay. And out of a sudden, everybody is taking it serious.
Also, a question from my side, Lars. Now that you looked into this for quite some time, if you could sort of go back in time with the experience now and all the potential pitfalls that there are, what would you say would you have done differently? Is there a learning that you can share with everyone else that you would not do, or that you would start doing in a different way?
Yeah, yeah, very good question. It was not prepared beforehand, but one big learning is that whenever I would, e.g., take over a new responsibility, I would immediately start with this brand mapping. So really to have transparency about the usage, the real usage of the brand in the various countries and the value streams behind. This is a homework which we have not done before, but which is a very important topic, which is helping the brand manager to act much safer than beforehand. This is what I missed beforehand, and this is what I would do starting from scratch.
Okay, thanks, Lars. I can see Geir had raised his hand.
Yes, Lars. First of all, thanks a lot for the very interesting presentation. One word came up listening to the whole thing. You have on one hand, you've got the tax authorities, of course, who want to see money, and as we all want, is not to pay too much to the tax authorities. On the other hand, I see the risk of cannibalizing a lot of brand value to avoid to run into the tax trap. How have you been dealing with that? Did it really come to the radar, or was that something that upfront was already a no-brainer on it?
Yeah. So I tried to elaborate on this due to the fact that There are some local brands which are not in scope, yeah, because the brands are used in the countries and owned by the companies using the brand very locally. And there is another strategy, and this is the tipping point, and the point we have to balance out. On the one hand side, the CEO of the group wants to use the brand, in this case, their Touristik, to develop a kind of joint identity even further. So he's using the brand as a lever to explain and to demonstrate his strategy. On the other hand, this is the tax trap we are in order to introduce this brand to the various countries. Of course, we have to be very careful not to end up in a increased amount of local tax we have to pay. So from my perspective, and this is a learning for me working in a company which is primarily a B2B company, yeah. If you think about a brand strategy, you have to connect this topic with consequences this strategy might have in this tax and licensing questions. So we missed it out when we developed the brand strategy for Der Touristik 2013, because nobody was able to foresee our international expansion at this moment. Yeah. So this is a discussion we bumped in due to learning by doing. Yeah, I'm not 100% sure if you could avoid this by 100%, but in having transparency about your brand portfolio and the brand usage, as I said before, the brand mapping, at least you could avoid silly questions from the tax authorities. Yeah, because they are sniffing money whenever it comes to brands in all countries, because at least the brand community have promoted the importance of the brand and the value of the brand. So therefore, at least this is my experience, since 10 years, the tax authorities jumping on the brand topic, knowing that there is money. Yeah, there is additional money to gain. Yeah. So the connection between strategy, brand strategy, and licensing system, this is, from my perspective, quite important to avoid this heavy effect of this brand licensing trap.
Mm-hmm. Okay.
Any other questions? There are no silly questions. As I said, we will share the documents with you afterwards, because I know there is a lot of content on this slides.
Yeah, thanks, Lars. I mean, maybe it's interesting for the attendees that I share an example. I mean, it might look a bit complicated on the tax side. That's basically not the problem of our profession. For that, you have colleagues in tax and finance and people that support them with that. In my daily life, we help our clients undertaking brand transformation journeys. And the way tax structures have been set up is normally that where the corporate brand sits, it is normally in a tax-friendly environment. And some companies have really optimized that. Like if you have your head office in Switzerland, as an example, I will not talk about company names, but if you have a head office in Switzerland, the company tax in Switzerland is say low, say 0%, but the average company tax in other countries in the world is like on average 15%. So we have one client in Switzerland, head office in Switzerland, where we have been able to make the case for the rebranding by demonstrating that if you would increase the value of the brand, you would allow the brand to increase the royalty charge internally for the brand. But due to the difference in the tax rate, it means that they receive more money in the center at 0% tax, and they deduct the same amount of money in all the countries where they operate at 15%. So in this specific case, we've been able to demonstrate for the board that the rebranding investment for 100% would be financed by the uplift in the tax advantage on the internal royalty charge. Now, again, it might seem complicated, but if you can find a way to justify a rebranding program like that, I can tell you that is opening doors. And so that's why I'm really glad that we have you all on this call to show you how it can work. It could seem technical on the one hand, but it's a business driver that people in the boards of your organizations really relate well to and understand. And that's why it's important for us, if we want to be knowledgeable in our field, to understand how that works.
Maybe one additional remark on this. Due to the fact that even the tax authorities have developed their expertise in this topic significantly, it's even one more reason to prepare yourself in the best possible professional way, which is starting again with transparency. You should know how your brands are used in the various countries. And you should know how the value is allocated under these brands, because in detecting the brand usage in our case, we found out that there are some cases where the local responsibilities reported us a pure reselling under the brands, and looking into the books, we found out that they do a decent amount of own production in the local countries under the brand, which is good to find it out before the tax authorities looking into it, because this is just an accident if they find it out. And for them, it's quite easy to find out these circumstances. Yeah? So there is a huge potential in this topic. On the other hand, there's a huge risk if you are not dealing with these topics actively. Then you are somehow just a passenger in a car which is facing the tax authorities on the steering wheel, which is not the most comfortable situation. You should bring the tax authorities in the position to argue against your arguments and not the other way around. Mm-hmm. So therefore, at least from my perspective, it's really worth to spend this effort and to run, if you are in a comparable, similar situation like we are, to run this this tiny project for your own benefit.
So that's another words, another call for action for people in communication and branding to look beyond just only your own profession, but also understand the legal requirements, the financial requirements around it.
Absolutely, vice versa. Because I can tell you, if I first time approached my finance colleagues, they looked at me with big question marks on the forehead. They just thought we only deliver numbers, yeah, to you. Also, the question who is responsible for the project is a quite interesting question. Is it the brand management due to the topic, a brand which is in the center of this project, or is it the finance department due to the fact that we are talking about value chains and tax questions? Yeah. From our perspective, from my perspective, the finance guys, they saw themselves only as supporters at the very beginning. Meanwhile, due to the increase of visibility in the boardroom, everyone would like to be part of this project as being project leader, which is good.
Maybe one other comment as well to the questions raised. I mean, there's also quite an opportunity to use the brand licensing externally. We didn't really focus on that today. But if you look, for example, in the telecoms world, if you look at Vodafone and Orange, they use licensing their brand to enter into territories that they weren't in yet. So normally they buy infrastructure, an operating company who has the infrastructure, but there is territories where they license their brand out to local operators, and then they negotiate a license fee for the use of the brand. And back to my slide on what that is really what is the bundle of intellectual property rights that we're talking about. So this is also something that we work with a lot with our clients, because it's really where you can leverage the value of your brand into, for example, adjacent markets or into other categories. So, and again, that's why the whole topic of licensing is so interesting, because you make yourself a different business partner with really getting into this topic. So, and that's why I think it's really important.
Okay, anyone else? We have a few minutes left. If anyone else, I think Phil Riggins is raising the hand. Phil.
Yes, I'm curious, coming from like a corporate communications perspective more, and you think about, as corporate communicators, your relationship with the brand is often one with dealing with the reputation side of the equation. And as you're going through this whole brand valuation exercise and thinking about what is the contribution of the corporate communicator to the what is the contribution, and how do you kind of manage that or deal with it? Does it even factor in?
Yeah, definitely. This is an interesting topic of our discussion we had with those countries using their Touristik only as corporate brand. Their first reaction was there is no value. The brand is contributing to the local business. You are looking into the HR processes, for instance, where they use their Touristik as the brand hiring or addressing potential candidates. Yeah, and out of a sudden, of course, there is a kind of certain value. Yeah, because otherwise, the corporate brand would have no meaning. Yeah, and no sense. The current process, and this is why we conducted the DEMPI and the RACI analysis, to really calculate very rational this percentage of contribution. And of course, this is quite low, but the contribution is not zero. Yeah. So therefore, for us, it's also a kind of experiment, and more than happy to share later on with you the structure of our brand licensing, because we have the whole range of brand usage in our group. So there are countries using the brand very obvious for B2C purposes and for corporate branding, and there are countries using the same brand only for corporate branding purposes. And there will be a range of licensing fees. But you are 100% right. This is the question: how to somehow calculate the effect of the corporate brand on the general business of the whole company. There is a percentage. The question is how big, how high the percentage is. But this is, sorry to add this, this is also increasing the attention on the importance of the different elements of the brand architecture.
Exactly.
And the relationship between product brand and corporate brand, for instance.
Thanks, Lars.
But also to your question, Phil, I think I can be a bit more provocative. I mean, it's interesting that communication is not something, or reputation, you see on a balance sheet or in financial reporting requirements, not financial, not non-financial, whereas brand is. and yet the whole world is talking about communications. It's interesting. I mean, it's a funny thing for me. I mean, the whole boardroom speaks the financial language, brand is in balance sheets, and communication is not. And I believe that we as communicators have to adhere to the business language and not the other way around. But I mean, yeah.
Can I just say,
conversation.
You jump in.
Do you mean not or not yet?
Not yet.
Well, I mean, I think I'm an advocate for brand speak, because I think it resonates really well in the boardroom, and I know that from experience. I'm not dismissive about communication at all, of course. I mean, everybody understands that, but that's why I think it's a more provocative topic, and I'm just curious about things like that.
100%. We have to speak that language. For me, it's like, well, so how do we kind of feed into that, and how do we become concrete, and so that they can understand what we're saying? Sorry, go ahead, Lila.
No, I was just going to build on the whole notion, because I've straddled both worlds. And so the notion of brand reputation as it relates to the balance sheet, I mean, immediately the place that I go with my head, having worked in healthcare and farm, is crisis management. And the minute you have a problem with one of the brands in your brand house, it has an impact on the entire portfolio. And that absolutely has I would say, a dollar sign measurable impact potential and how you handle it. So while we don't necessarily tend to think of it as comms as people that are talking so much with the finance people, I think to some degree we actually are, because when we're looking at crisis management, we're the first group that we bring in, and what we're trying to mitigate is loss of sales ultimately, without sounding too cynical.
Yeah, but this is, you're 100% right, Leila, but this is due to the fact, from my perspective, that the mechanism, there is no formula to somehow translate these effects into numbers. And the brand licensing topic, due to already established mechanisms, is helping us really to calculate the value of a brand. And the next step would be over time to indicate, for instance, external effects on the brand value. Because, I mean, starting this process does mean that we have to run through this value calculation process every year. Yeah, to somehow invoice the various countries. So we have to find a way to improve to prove the value of the brand on a yearly basis. And if you then connect this with events which happened during the course of the years, then you could connect the databases in a way that there will be a connection between a crisis, for instance, and the development of a brand value over time.
Or the
we all know that.
I would say then the non-impact, because sometimes the best comms is actually when there's none. And that's very, very hard to explain to leadership, that what we actually did was, managed the issue to zero, thereby protecting the reputation, thereby protecting sales, and thereby protecting the brand. So
yeah, you're right. Absolutely.
Again, it's a very difficult number to quantify. I mean, I found your case study fascinating in terms of thinking about, I could, as somebody who worked in a regional capacity, I could already hear the countries groaning and saying, oh my God, now they're going to charge us for something. It's a chargeback, but there's also a tremendous value associated with it. And it goes over then to your side of the world, Phil, where we talk about, at the same time, the parent company is protecting reputation and enabling that brand to actually have the value that it has. So I think it's a two-way street.
Absolutely, absolutely. They very often take it for granted, and they are happy to use the positive side of branding, reflecting their connection, being part of a strong group, especially in tourism, for instance. In nowadays, it's a very important topic to be able to refer on a substantially healthy group as our group, for instance. Yeah, but if you then come along with, okay, you are leveraging this brand, there is a certain value, we would like to have a small amount of license fee from you, then they turn around the argumentation and try to explain to you that there is no value at all being added to the business, yeah, which is a habit thing from my perspective. And this is a task for us working with this topic to convince everyone that this is for the sake of the whole organization to secure and to work on this transfer pricing architecture. Because otherwise it will become very, very expensive. Good. Any other questions? 1 minute
right
to go.
On spot. 1 minute to go. Right on spot. Fantastic. I think really insightful session. Anything to add? Any other question? Again, you can also continue the discussion in our LinkedIn group. You can also find us on LinkedIn, for example, Lars, if you have a specific question, and follow up. But also, of course, you're very invited to share any of your experiences around the topic, not just now, but if you come across that, also to continue the sharing and the discussion in our other groups. Okay, from my side, thank you very much, Lars and Mark, really insightful. Also, thank you very much for the participation of everyone and also the fruitful discussion. Any last words from you, Lars or Mark?
No, as I said, wish you all the best. I'm sure we'll see each other in the EACD context. Feel free and contact me directly if you have any detailed questions. And the most important thing is, wherever you are, stay away from COVID-19, stay healthy. All the best for you and your families.
Pleasure. Thank you. Bye-bye.
Thank you, everybody.
Thanks, everyone.
Bye.
Have a good afternoon. Bye-bye.
Bye-bye.